Hi everybody, this is Robert Rivera with Rivera Trading Group in association with Trend Trading Academy. And I'm sorry for my backwards kind of hat and my funny looking get up. I didn't anticipate that I was going to be making this video, and I ended up with merch from another company that I don't want to promote at this point. So but today, as I was thinking here again at the doctor's office, waiting for my wife to do her therapy, I figured I would talk to you about brokerages. If you have decided, for example, that you want to trade, what is the next step? You know, one of the things that you're going to want to do is find yourself a broker. And there are several categories of importance as far as what to look for in a broker. But I just picked 4, and I'm going to choose to speak about those. I'm going to try to keep this short. One of the main things that you want to focus on is spreads. You know, what kind of spreads does your broker allow? Spread is the pips, or I should say, the fee that they collect for allowing you to trade in their platform, and also for using their leverage, for example. That's another topic, one of the 4 that I'm going to be talking about. But so you want them to be, you want a brokerage that uses very low spreads. That you, for example, the broker that I'm using currently on the GBP USD pair does not charge me any spreads. It's perfect. That's exactly what you want. That means that when you enter a trade, you're getting the exact value of that, of the exact price of the value of that pair at that moment. Otherwise, for example, if you get a 2 spread fee, that means that when you enter, you're 2 pips in the negative already, which means that pretty much every time you enter a position, you're going to be negative at least 2 pips. That is just the cost of doing business, and that's fine. But the lowest spreads that you can get, the better. And again, it's one of the reasons why I tend to be more aggressive with GBP USD, since I have 0 spreads, and I can make a quick profit. If I'm scalping, I can get in and out with exact precision, because I don't have to wait for my spread to be covered. Okay, that's one thing. Also, you want to get as much leverage as you can. Leverage is a big topic. When I first started doing a little research on Forex, there were a lot of talks about you don't want to get an account with too much leverage. You know, their accounts with 1,000 leverage, 1,000 to 1. That leverage, by the way, is how much money your broker allows you to use for every dollar that you have, or US or euro, whatever, in your account. So the broker that I'm currently using gives me 300 to 1. For every dollar I put in, he gives me 300 to trade with. Okay, there's 500 to 1. There's 1,000 to 1. Most of the US based brokers do not allow more than 50 to 1. Honestly, 50 to 1 is plenty if you're getting started. But when you start trading at the higher levels, and you want to be able to use some leverage to trade, for example, gold or any of the indices, you're going to need that leverage. You know, I have a demo account of about $30,000, $35,000, and I was trying to take 2 standard lot positions. I took 2 standard lot positions on the S&P, and I couldn't take any more. That's with actually, because the demo is 200 to 1. That's 200 to 1. On a 50 to 1, I wonder if I could even do 1 position, you know? So, in the beginning, when you're beginning to trade, you're not going to use that leverage. And in fact, if you're using proper risk management, you're never really going to use that huge of a leverage. But once you gain experience and you have a track record on your side, and you want to venture into, for example, again, the indices that it takes a lot of money to get into, you're going to want that leverage. So you want to find a broker that gives you as much leverage as you can get. And I know there's going to be controversial to some people, but bottom line is, you're never at risk unless you are over leveraging your trade. You're never at risk. So that's not really an issue. So you want somebody that gives you a good leverage on the money that you're going to be trading with them. Okay, a third thing is positions. By that I mean there are some brokers that do not allow you to have more than one position on any given pair before you close that other position. You have to close that position in order to open another one. That's a really disadvantageous if, for example, you are stacking positions for a longer trade or a bigger trade, or if you're carrying momentum and you want to continue to take positions as the trade is going in your favor. You don't want to do that as the trade is going against you, okay? Called hedging, but that's not a good thing to do, especially as a new trader. If that's not part of your strategy, you don't want to be doing that. But if it's going in your way, you want to be able to take multiple positions as it's going in your way, right? That increases your profits. Experienced traders can do that and know how to do that. Well, there are some brokers that won't allow you to do that. So you want to be able to use a broker that does allow you to do that. And lastly will be deposit and withdrawals. You want to find a broker that's easy to deposit with and is easy to withdraw. But you also need to consider that if it's too easy to get in, perhaps it's too easy to get out, and that means that other people can get in there and hack your position. The broker that I use is very strict on the requirements for you to be approved. So it takes a couple of days for you to be approved, but those requirements keep your account safe. It also takes a couple of days for you to get your withdrawals, but again, your money is safe. That's the biggest thing as far as I'm concerned. I have a separate account that I opened for my wife, and I decided I wanted to close that account and move the money into my main account because I can make more money with the higher leverage and the bigger account that I have on my account. So I went to make that withdrawal, and I received a message saying you haven't used that money in quite a while, so we want to know why it is that you want to withdraw it. This is part of our withdrawal policy, so we want to let you know that you won't be able to withdraw the money until you let us know. What the heck is that? I mean, what the heck is that? Who cares what the reasons are for me to take my money out? It's my money. If I want it, I should be able to get it. Okay, you don't want to deal with a broker like that. Okay, I'm not going to say the name so that I create an issue of it. But you want to be able, it's your money. You want to be able to get it out, and you want to be able to get it out safely, and you want to be able to get it out timely. Okay, in order to do it safely, it takes a little bit of time. But you don't want it to be like a week. You want to be able to get it quickly. So quick enough, fast enough, so you can use it for the weekend, for example, your gains. So anyway, this is already too long of a video. It's almost 8 minutes now. I don't want to keep it going, but those are the 4 things that I thought were pertinent in looking for a broker. You want a broker that has low spreads. You want a broker that has high leverage according to your goals and what you want to accomplish. You want a broker that allows you to have multiple positions on the same pair, so that when you are in profit, you can continue to add positions to it if you so desire. And you want a broker that allows you to deposit and withdraw quickly. Now you can deposit via Bitcoin. I know there's some brokers that actually allows you to deposit with Cash App. I mean, that's how convenient is that? And obviously that's also very convenient because then when you get your withdrawal, it goes back into your Cash App account, and you can use that Cash App account whichever way you want to use it. So anyway, this is Robert Rivera again with the Rivera Trading Group and in association with Trend Trading Academy. And hope this was helpful to you. Take care. Bye-bye.